Good morning, everybody. Good morning and happy Wednesday. Welcome to October. Welcome to October. Hope you guys are all ready for a fresh month and for the fourth quarter, by the way, as well, right? It's not just the beginning of a new month. It's also the beginning of the fourth quarter of this year. I hope you guys all have your Halloween background on your phones like I do. I'm kidding. I mean, you may, but might not. Let's see here. If you guys can hear me okay, just as always, if you can quickly just confirm, that would be amazing. And then we're going to get started. I've got a few things I want to go through here today to start off the month and quarter, right? One thing that we would like to do first and foremost is kind of go through the monthly charts, which we'll do right now. So it's 2 minutes past the top of the hour. Let's get started. Again, good morning, everyone. If you are if you're here for the first time, thanks for being here. Please make sure you subscribe to our YouTube channel. It's obviously totally free. Allows you to be updated in real time when we go live with analysis and things. Also, please make sure you give us a thumbs up, like on all the videos, maybe even leave some comments. I see some people are doing that again, so thank you so much. We really do appreciate it. Let's see. Let's have a quick look at today's markets. Basically, it's interesting. So we're seeing. So this morning is one of those mornings where, if you look at it closely, you can see essentially the dollar's down versus essentially, euro and sterling. But cryptocurrencies are actually a little bit better bid. We had a weekly jobs numbers earlier this morning, which was a little bit mixed, if you will. So the bond yields spiked. Bond yields went down. Excuse me. Well, you can look at that. If you look at the 2-year yield, you can see they're down a bit, 3.55% this morning. So I'm honestly not quite sure what to make out of the action this morning, particularly because it's the beginning of the quarter and beginning of the new month. The only thing I know is that the equity market can give us some surprises in October. And one thing I want to just quickly start off with, and Bill, appreciate the comment. We'll see what the fourth quarter brings. But one of the things that I just want to quickly point out is that the consensus right now, when we talk to people, and it just had a morning conference here, believe it or not, already early morning this morning, on institutional side with a breakfast thing. I have a lot of those. And one thing that has definitely become a consensus is that the equity market is going to continue to push higher in the fourth quarter. Quite frankly, I'm very open-minded to it. I don't see much reason why it should, but I will certainly respect if it does. Liquidity is still, ample. But I do think one should think about, given that has absolutely become the consensus view that we'll see a fourth quarter rally here. What if it doesn't materialize? Just for your own portfolio, right? This is not advice, it's just a thought, and I made a couple videos on this. So I think everyone should kind of think about, how would you handle it if the fourth quarter rally doesn't happen, which doesn't mean that the market has to fall apart. It just means that what if there's no rally, right? Notice there's a very big distinguishment there, right? So I think that's one thing that people have to think about is the potential, not even the potential, but just what if it doesn't happen, right? Because it has become so consensus. I don't have an answer for you. Everyone's got their own portfolio. We can't give investment advice here, as you know, but I think it's a thought that I would certainly encourage everyone to have in the back of their mind. What will you do if the market doesn't rally? And, in worst case, if the market literally goes down in the fourth quarter, what will be your how will you protect your gains? What does that maybe mean for next year? We'll find out. I want to quickly show you what's going on in commodities. As you guys probably know, we have been very bullish commodities for particularly the hard assets, right? So things like platinum and gold and silver and things like that. I wanted to quickly show you guys what the performance is. So if you look at this is my global macro watch list. I have a more extensive one, but I think for purposes of today, this should suffice. The commodities watch list is, and this is just a few of them, right? But didn't want to make it too long here. You can see what some of these commodities are doing year to date. So even if you look at copper, which actually copper really hasn't had a great year, relative to other commodities, but it's still up 21%. Palladium is up 42. Gold and silver are up, 47 and 64% respectively. Platinum is up 78. In full disclosure, and again, not advice, but we have actually been basically getting rid of our platinum and even silver and silver miners and gold miners positions in some of the mock portfolios that we run on the Steady Trader. If you're an ETF Silo Pro member or Heat Seeker, you've seen that taking place. And that's not because we don't like those longer term. It's just because we think they've had a really big run. So, and we've been doing this over the past, few weeks. So they've all received our trade alerts on that. So just kind of give you a bit of an idea, So it's not like if you look at something like platinum, it's not like this can't go higher. It's just, that's not the one. That's Pakistan. You look at platinum, for example, it's not like this is a terrible looking chart. It's just that it's rallied basically since May. Platinum is up 60%. Same thing for something like silver mining stocks, which just there's like an endless bid. But at some point, and it'll probably happen if the dollar were to bounce, then you'll probably see, some of these things get clocked to the tune of, 25, 30% pretty quickly. So we try not to get clipped like that, from a trading perspective. So we took that off for a bit now. Let's see here. What else? If you just quickly going back to our trusty chart that we've been showing every single morning, again, you can see it here even better. This is the year-to-date chart of things. So platinum, uranium, gold miners, silver, blah, blah, blah. It's all leading. But we do think it's getting a bit stretched. Near term, not longer term. We think there's still plenty of upside, multi-quarter, multi-year. But the other thing is also we want to protect some gains, right? So you have to think about that as well. Again, not advice, but if you're running a book, whether it's your own book or someone else's, running money for other people like we do over at Blue Marlin Advisors, you want to make sure that you book some gains when there's an opportunity to, while respecting the trend. It's a time frame question. So that's that. So we come into this month of October with a fresh set of monthly charts. And so here is what the monthly charts look like, particularly with stocks first. We're looking at the S&P 500. You can see was another monthly up bar for the month of September. I think we all know that by now, and we are definitely now at the very, very upper end of, if we kind of connect all the dots, of the rally since 2009. Even I can do that math. That's 16, 17 years of raging bull market. So the question is this really where we have to add risk up here? Listen, we can always go a bit higher, but I think it's going to get more and more difficult up here. Doesn't mean we have to fall off a cliff, but this is just a very simple S&P 500 chart. If you kind of draw a median line here, you can kind of see, how this is symmetrically works out really well. So this is kind of like your S&P 500 chart. So, would it be that crazy to think that at some point we're going to mean revert, down, 10, 20%? Absolutely possible. Does that mean have to happen here in the fourth quarter? I don't know. I mean, it would be absolutely par for the course if it were, but I don't know. I want to make that call just yet, right? I think trend following and momentum remains where we want to be, which is our process anyway. The NASDAQ 100 from a monthly chart perspective, same kind of thing, right? You can see we're kind of really at the upper end of things here. Then you look at stocks like NVIDIA, which again, nothing new here, just another up month. Last month, you look at stuff like Oracle, which had a really big month, right? And if you look at that chart, we're seriously above trend. It always depends a little bit which line you take, right? But the point is, nothing is really sort of at the point where it's like a bargain to buy from a very simple sort of technical perspective. Even if you were to do something crazy on Oracle, and this is just drawing lines, right? This is nothing. It's nothing too scientific. But even if you were, I was doing this earlier for someone. Even if you were to just draw parallels, right? You could kind of imagine that we're probably closer to a high than a low, right? And even something like Oracle, and this is a big chart going back to the year 2000, so 25 years worth of charting, right? I think that the fairer chart would be something like this, where you can see we're above trend, right? So I think a lot of stuff is getting very overbought and extended again. Doesn't mean it has to crash, doesn't mean it's the end of the world. It just means that it's probably not something we want to buy. And indeed, I showed this to our clients yesterday. If you were to look at something like, we have an indicator called the Vertical X Pro, which tells us when something is extremely overbought or oversold. And you start to see it in some of the precious metals markets as well. In this case, through an asset manager. I mentioned this yesterday to our Trade-a-thon members, and you look at Sprott Asset Management. This is SII is the ticker symbol. You can see it's giving us an extreme overbought reading with the Vertical X Pro. Again, doesn't mean it's a bad company or it's going to fall off a cliff. It just means it's probably not where we really want to buy necessarily, at least for a multi-week perspective. So just thought I'd point that out. Speaking of things that look increasingly extended to us, there's a company out there called Robinhood. Maybe some of you even have that as your broker. And I just want to give you a bit of an idea. So this is a company, if you look at Hood, HOOD is the ticker symbol. It has essentially constantly been growing its sort of strategy offering, right? So from these what are they called? Whatever markets, like sports betting markets. There's a name for them. I can't remember right now. Anyway, so they're offering all these different things, and if you look at the company a bit more specifically, you'll find that this is a company that actually has been consistently growing its top line. So it's not like this is one of those things where there's no growth, right? So you look at, for example, even the bottom line, right? It's been growing at a rate of 50 to 100% a year for a quarter, excuse me. Year over year for basically the past year and a half or something like that. So this company is really growing. That's not the issue. I think the question is, when you look at multiples on a company like that, you're looking at something like PEs, which is I think something that a lot of people follow. PEs are just at 70. It's just, even for something growing at this rate, it's getting a bit egregious. And then you look at something like the stock chart of Hood, and you come up with something like this. Now I'm going to make this a weekly chart so you can see this a bit better. HOOD. So this is now the multi-year, going back to 2023 chart of HOOD. So Robinhood. And again, the question is, do we need to really buy something when it's up here at the very, very upper end of its multi-year trend, or wouldn't it be a bit more favorable from a reward to risk perspective if the stock were, let's say at least at the middle part of this longer term trend? I understand liquidity is still out there. Regulation is very favorable. So, there's certainly an overshooting that can happen even more, but I think the reward to risk gets, to me, as a general basic rule, maybe I should put a bow around this, I don't like to buy things at the upper end of long-term ranges. And this is by all definition, an upper end of a long-term range, since it stretches back to 2023, right? So it's long-term, in this case, it's 2 years. So to buy Robinhood up here would mean that one would expect, a vertical move. And keep in mind, and again, I just got back from a sort of a breakfast thing, institutional thing. Like, institutions too don't like to chase things at vertical lines, right? So, you're going to get less and less people willing to buy at lofty, just even price levels, right? And you forget valuations, right? So that's another thing that I would point out. So coming into this month, let's see how markets react the next few days. It might be a little bit telling. I want to be very open-minded in the fourth quarter. If you look at performance, we're already having a good year, right? So if you look at, for example, we'll look at the multi-asset chart one last time here, just for today, and indeed in fact, let me quickly add the S&P so it doesn't distort the chart as much. So here we go. So here you'll see like the S&P 500 is up 14.6%. That's a good year, right? Does that mean that the S&P has to go up another 10% for the rest of the year, or 5%? I mean, it certainly can. It's a risk management exercise. I think a lot of people, should ask themselves, is that likely or possible, or whatever choose your favorite word there. So anyway, I'll leave it at this. Keep it nice and short to exactly 15 minutes today. We'll be back here tomorrow for Thursday. Ticker Thursdays as well. So let's ease into the fourth quarter. Let's ease into October. October can be a very opportunistic, or month full of opportunities, I should say. So I usually come into October optimistic about opportunities, not so much about the direction of the market, whether it goes up or down, but more about the opportunity set that we might get, because it tends to see a little bit more gyrations, which of course we didn't get this year in September. So anyway, hope it helps. See you guys back here tomorrow morning. Tomorrow, which is Thursday, of course, October 2nd. Have a good start to the month of October, fourth quarter. And everyone that's a Trade Ops member, we will see you guys over there. Trade-a-thon is over, by the way. It's been a lot of fun for everyone that joined us for Trade-a-thon in the month of September. Every morning we did, between probably closer to 45 to 50 minutes, repeating our morning process, showing people what we're looking at every morning, how to find ideas. So I think that was a lot of fun for a lot of people. A lot of people learned a lot. I certainly enjoyed doing it. So, but it's over now. We did it a whole month, and I know a lot of people are going to be applying all that stuff now here. That repeatable process here in October. So thanks for being here. Please give us a thumbs up, subscribe to the channel, and we'll see you guys back here tomorrow morning. Take care.